What's up, guys? I am Dominique. Welcome to the Domino Effect. And today we're going to be talking about business funding loan programs. Business funding loan programs in 2024. I'm just checking all of my settings here. I want to make sure my audio is working because, I'm just getting used to this videography game and I'm still getting my bearings about it. I'm a financial coach, guys, not a cameraman, but I'm doing my best to get all of this information to you. Why? Because it's important. So, I want to talk about some things today, guys. I want to talk about business loans, term loans, SBA loans, a few things that you need to consider when you're making your decision on which product that you want to select, right, for your financing for your business. Domino Effects Group was founded to help entrepreneurs just like you, right, get the capital that you need so you can see what financing products out there on the market will best fit for you. We make it easy for you guys, right? We get you the most amount of money that's available, and we brought all of the lenders together in one place to help you do that. We have many lenders on our platform, and we've done that through building, an amazing platform, an amazing team. We're continuing to build, continuing to grow. We love feedback, love hearing from you guys, love hearing your questions. We've helped secure loans all across the country to all industries, to in all types of businesses. Okay. So we're going to talk about, like I said, term loans, business lines of credit, the difference between the two, SBA loans, working capital, what is it, right? All of this kind of stuff. Accounts receivable, equipment financing, and then how you guys can get started, okay? So, like this channel, do me a favor, hit that subscribe button so that we can continue to grow and build this channel and get this information out to you. Knowledge is power, guys. So, let's dive in and talk about business term loans and lines of credit, because the main thing that you really have to understand when you're out here is you really got to understand what you're going to be using the money for, right? Business term loans, when you borrow a set, is when you borrow a set amount of money, right? And so typically, depending on the product, it could be 12 months, it could be 24 months, it could be 36 months. But, that depends on what it is. If you have an SBA 7A term loan, that's 10 years, right? So you can get equipment financing 2, 3, 4, 5, 6 years. Okay. And this is specific to equipment. So if you guys are needing equipment, you should definitely be considering equipment financing, right? So you're not tapping into like working capital that's going to wrap up or lock up your cash flow, right? And it's good for startups, right? So any of these term loan products is for business. They're usually for long-term projects, right? Like expansion, where things like you have the long-term ability to pay it back, right? So it's really not necessarily for the immediate turnaround, right? Maybe you're going to staff some people. That's going to take some time for you to generate revenue, right? So having that longer repayment term in those instances is better, guys. If you're buying a business, if you're acquiring a business, then you might be looking into those longer term periods, right? So the difference between the term loan and the line of credit products, well, lines of credit are really good with things that, you can get a quick turnaround, right? So you buy something, you can turn it around, you can sell it, right? You're doing a job maybe that you'll have done in 15, 30, 60, 90 days, and then you're going to basically lay this money out, right? So then you're going to flip it 30, 60, 90 days, and then you'll be able to get your money back, right? But, lines of credit are really good for opportunities like that, okay? The whole point, you guys, with a line of credit is you're going to borrow, you're only going to pay what you use, okay? And then, like, so for example, if you're going to get bulk inventory, right? You're going to get that bulk inventory, purchase it, right? Sell it, you get paid on it, right? So, or maybe you're in a business that's constantly has buying opportunities, right? Where they come up and you need cash on hand. So this is where a line of credit would help, and I'll give you an example, guys. So let's say you apply for a business line of credit, they approve you for 80,000. All right. But let's say you only need 10,000 or you only need 15,000, right? You can use that. You can pay it back. And then, within a reasonable amount of time, you're making your payments on time. That $80,000 line of credit can get bumped up to a $150,000 line of credit. Okay. That's what I'm telling you. Okay. You know what I'm saying? This thing is, it's a staple. Okay. And it's why lines of credit are really a favorite amongst a lot of businesses, right? So let's recap this, right? Lines of credit, they're flexible to businesses. You're only going to pay interest on what you use, right? Okay, so if you get that $80,000 line, you're only using 10, 15, you're going to pay the interest back on what you use, but you can have access to it, when you need it. Okay, and that's the most important thing. And with the lines of credit, you can get pretty fast approvals, within a couple days, within a week and a half, okay, depending on the lender. Guys, if you go to like a Bank of America, a Wells Fargo, or a Chase, or even, somebody that you're already currently banking with, they're going to take a look at like your business statements and your accounts, but they're going to look at your personal credit as well. Personal credit is a huge factor in their algorithms. So, the difference between traditional banks and alternative lenders like Domino Effects Group and our partners and GRA Capital, they're not actually looking at your FICO score, for this specific product. So lines of credit are really good for like those fast situations. So, long term, you might consider using things like a term loan, right, where you have longer repayment terms. And then when you have for short term opportunities in a business, then you want to utilize a line of credit, guys. Now, I know that a lot of you guys are looking into business funding, right? That's why you're here, right? But when you apply, right, when you're applying, you don't just want to put any old number on there, okay? That's not gonna fly, you guys. So what they're gonna do is they're gonna ask you, to supply them with business financials, specifically, your business checking statements, depending on the amount that you're asking for. If it's a larger amount, we'll need deeper financials. But whenever you put down, guys, be truthful. Okay, be truthful. Do not lie. Okay, and if you lie, that's bank fraud anyway. But so technically, just be honest about what your average monthly revenue is. And yes, they will check. Okay, they will check, they will verify. And we want this to be a smooth transition, right? So you'll check, they'll verify, you'll get approved. Now, if you don't get approved, it's not the end of the world. Okay, we have solutions, we have advisors, we have systems. We can come up with a solid plan. Okay, if we work together, we can come up with a solid plan to get you where you need to be, where you can get approved, possibly within the next 6 months or so, depending on your situation. Excuse me. Now, let's hop on over to SBA loans. Okay, so SBA loans, these can meet the needs of many different businesses, right? They're government backed loans. Now, they're not necessarily the government lending directly to small businesses. Okay, they're setting the guidelines. Okay, SBA sets the guidelines for partners, banking partners, CDFIs, micro lending institutions. The SBA is reducing the risk to lenders by guaranteeing the loans are going to be repaid back. So you apply through an SBA lender. We partner with the SBA lenders on the platform. Now, SBA, they want you to have like 2 to 3 years time in business. Now, if you're a new business, you might have some difficulty. You might be asking yourself, right, how do I even get an SBA loan? This might not be for you, right? We're assessing all of our options. They're government backed. They're government backed loans. So they're looking for, established businesses. They're looking for businesses that have some time to it, to maybe some that have survived some rough patches or, are on a growth spurt. But, it's, there's still a great option. And but the statistics, right, guys? I mean, a lot of businesses, they don't survive their first year, let alone second year, let alone the fifth year or even the 10th year, right? So, but even before the 10th year, a lot of businesses don't survive the first, second, third, or fourth. So think about it like that, right? So they want to see that you have some skin in the game, basically, right? And with SBA, you can get up to $5 million, right? Terms can go up to 10 years, even 25 years. But the cons to this, guys, is it can take a really long time, right? They're really in-depth application process. And, you're going to have to submit really extensive financial documents, but I've seen them do some really amazing things for for some of our clients. So now, you guys, let's step on over into unsecured working capital. Okay, but what is working capital, right? Well, working capital is not necessarily a loan. It's like the term, right? So you take it out, you pay. It's used to utilize for everyday business expenses. So it's money that your business needs for operating, day-to-day operations, payroll, inventory, software subscriptions, utilities, things like that. But are some unbelievable unsecured capital programs out there, you guys. And you can combine, loans with things like business credit cards, revolving credit cards. There are credit line hybrid programs where you need just a 680 on a personal credit, but there are multiple programs that are available for you. So if you do have a 680, right, if that is you and you fall into that category, then you might qualify for an unsecured loan. A couple things about that, a couple other requirements is you can't have any unpaid collections, no judgments, everything must be current, minimal inquiries under 40% utilization. And if that sounds like you, then you might have an opportunity here to access some working capital, right? So how could you use that? Well, I mean, I'm sure you guys could think of a ton of different ways that you could use a working capital loan, right? You could use it to smooth out cash flow if you're struggling with, maybe affording your bills by the due dates, right? Maybe you're getting paid from your client after the due date, right? So you can use a working capital or a line of credit to help you avoid, that stressful time, right, while you're waiting. And then you can also use it for new projects, guys. If you have projects that require upfront expenses, okay, if you're going and you're getting the supplies up front, then, you need supplies, you got to pay contractors, you're hiring new staff. You might not see some of these proceeds for a while, for months even. So this is where that could really come in. And then it can also help to step in and cover expenses during off seasons if you're a seasonal business. If a slow season is approaching you, then you may want to apply for this. You may want to reach out and want to apply for a working capital loan or a line of credit so you have that. It's going to help you ensure that you have enough funds in case you run into a situation or once you step into your next busy season, right? And then also you can use it for emergency expenses. Guys, we all know things happen, okay? Businesses be businessing, all right? So because of that, we need to have a backup, all right? So, maybe everything is going great for you right now, but I say expect the unexpected. Things happen all the time. And we're always talking about here on the Domino Effect how you can utilize this system of preparation to leverage opportunity. All right, guys. Now, even if your business is running smoothly, right? Not having any working capital can cause you to lose opportunities, cause you to lose jobs, cause you to lose contracts. Okay, imagine having to turn down a contract, right? Because you couldn't afford any of the upfront costs. I mean, that would hurt. I've literally had these conversations with a female owned company who was literally turned down a 50-store contract because she couldn't get all of the money for the upfront costs. So, see, successful seasonal cyclical businesses, they take out working capital loans, guys, because it helps cover expenses. Okay, when you're having a slow period, it helps bridge that gap. Okay, bridges the gap between the slow season, between the busy season. You can get both an unsecured loan and you can get a line of credit. Okay, because they can give you both additional cash and there's pros and cons to both. So you just got to make sure that you're doing your research and that you are finding the best option for what your need is and for where you're headed, right? So and then if you don't know what that is, then make sure that you're reaching out. You're scheduling your funding planning session so you can find out what your current options are with our team, right? But with these type of loans, you don't always need collateral, which is great. So, you can maintain ownership. You're not giving out equity, essentially, right? So let's talk about MCAs. MCAs. Let's talk about those. You guys know about MCAs? You know what MCA stands for, Merchant Cash Advance, okay? Now, what is this? This is not technically a loan, okay? It's a cash advance, MCA, right? So it's paid. You withdraw a percentage of your credit sales, and they'll typically take it out on a daily, weekly, or monthly basis, right? Depending on your situation. So basically, when you take out an MCA, the lender is going to give you a lump sum, okay? And then they'll take the percentage of that, like I said, back, and it'll be daily, weekly, or monthly, right? To determine your eligibility, they're going to look at your deposits, they're going to look at your bank statements. And for smaller businesses that need access to quick financing, and if you accept credit cards, then this can be a useful option with you, right? But, we got to talk about the cons too, right? Listen, it's going to have higher interest rates, guys, higher interest rates, higher fees. because they're taking on riskier clients, right, than traditional loans. They are more expensive. They have a higher annual percentage rate, and in this case, they refer to them as factor rates. So just so you be careful, and please don't get too many of these. All right. So I have seen situations where we have had multiple clients with multiple MCA loans. You will dig yourself a hole that you will find it will seem impossible to get out of, but nothing is impossible. But I be careful, okay, you guys, when you're out here, like I say, applying. You don't want to just be out there blindly. Do your research, okay? But there are a lot of benefits to these. So for business owners who are complaining, saying, "Hey, listen, I don't got the right credit. I'm not there yet. I'm still working on what I need to do, and there's no financing for me." Yeah, you can stop saying that now, right? Because there is financing. That is if you have it now. But a couple of things, guys, you got to have some revenue here. So, $10,000 in revenue. If you're in a gig worker, there is a lender that will go to 5,000, depending on what you need. So, we'll go from there. So, guys, let's dive into next accounts receivable. Okay, so what is that? Right? What's accounts receivable? Well, this is really dependent on your invoices, is essentially what it is. It's a collateralized loan, okay, based on your financials, your receivables. So benefits are these are you get a lower interest rate. It saves time, which is a really good thing, right? From collecting your receivables, it opens up your cash flow. But some requirements, guys. Hey, no minimum FICO. Okay, no minimum FICO for accounts receivable. You can get interest rates with lenders on our platform for under 2%. You can receive up to 80% advance on your receivables, and we can even go up to 20 million. Okay, 20 million or more. I've seen that. So, what do you need to submit for this? Well, you'll definitely need to submit an aging report. Okay, they're going to hold on to it as you move forward, right? Now, equipment financing, guys, I touched on this just briefly earlier. All my truckers out there, everybody in auto sales, all my barbers, all my restaurateurs, anybody looking to purchase equipment, right? Food trucks, okay? Equipment financing, this is huge in the restaurant industry. Okay. So equipment financing is huge in the restaurant industry. You got to get a commercial oven. You got to get the dishwasher set up. You got to get all that stuff that you need in place, right? Maybe you're going to set up a nice patio area on the outside. You're going to, I don't know, set up, renovate maybe the back area so that the staff can maneuver quickly in between the front of the house and the back of the house, whatever that is, whatever that looks like, right? The benefits of getting equipment loans is really that you have minimum monthly payments. Okay, you get a short a term loan, so you can get 2, 3, 4, 5, or 6 years on those multiple year loans, right? And then they also, you're not even going to put a down payment on these, guys. And also you can get sale leaseback options. We'll dive into that in another video. I'll bring one of our sale leaseback lenders on, and she can go really delve into it. So make sure that you're not missing that. But you can get over 5 million in equipment loans. You can get over 5 million. I've seen much more than that. So if you're looking to get your first or second truck, or you're looking to get a food truck, or maybe, this is something that you definitely want to consider. I remember I had a gentleman that was had a landscaping company that they were starting, and they needed a vehicle, but the vehicle that they were using, they were paying $3,000 a month in rent. So they wanted to get a vehicle. So what they were they wanted was $10,000 to put down on a vehicle from like his neighbor or something. And it was just a regular car. And so, of course the decision is up to you independently, but what we were trying to have him see was that we're going to save the $3,000 a month. There's many things you can do. You can apply to get the vehicle equipment financing, get the vehicle under your business in your business name, right? But instead, he continued to work with to get the $10,000 from, went to go out and search for the $10,000. But the thing is, if without credit, without cash flow, right, then your options, guys, are limited. So, I know that we come in thinking, oh, I need I need this type of product. I need a $50,000 just lump sum working capital loan. I need just to do this. Well, get more specific. I would say get more specific on what you need. Get more specific on what it's going to do for you once you obtain it, right? And then go from there. Okay? Because I promise you there's a better option, and possibly even one that we can customize that would make more sense for what you need to do, right? Maybe we could get you vehicle financing strictly under your EIN. Guys, all right? All right, we're talking whole fleets here. I'm telling you. All right, I've seen it happen. If you're in medical, if you do medical supplies and you need, the I can't even think of the word. The vehicle ambulance. Like I don't know why I can't think of the word. Excuse me. These type of things. There's so many different ways that you could look at it. So rather than just getting a lump sum, you could look at other options like equipment financing. So we look at what is going to be the best fit for your need. So maybe for you, you're looking to do some long-term stuff, you're looking to do some short-term stuff. Maybe it might make sense to look at both of these, okay? Every situation is going to be different, guys. And depending on you, depending on your business, depending on your industry, your opportunity, right? Depending on whatever that is, that's really going to make up the product that's going to make the most sense for you. Okay. So everyone's situation is different, and you need to assess your situation individually and not compare yourself. Make the best decision for yourself and get with an advisor, okay? Because I promise you there's an option out there for you. But also, just a side tip as a bonus, you also want to make sure that you're looking at the rates, that you're looking at the terms. You're paying a close eye on that because like I said, sometimes there's situations where you can have both products, right? You can finance equipment and you can have an SBA loan. You can have a term loan and you can have a line of credit. Right now we're doing a term loan. I'm sorry, we're doing a line of credit and then we're going to step into an SBA. We have another client where we're doing a line of credit and they're doing a term loan. So there's many different opportunities that can fit for each situation. And some of this can be confusing, guys. I know that. There's not a lot of really great information out there. And a lot of times if you go to your bank, your bank that you bank with, sometimes it can be challenging for them to explain this to you, right? Have you ever felt like that? So that's really the value that my company and my team really bring to the table. You can call us, you can ask us questions, and we explain all of these things so that you understand exactly what you and your business need, right? And then we'll help collect all the documents. So we'll just gather all those documents from you. We package it up and then we get you submitted. So we have you submitted into our underwriting team. We do our in-house due diligence and we manage the whole process. So we're going to manage the whole process from application all the way to funding, guys. And so not only are we saving you the frustration and your most valuable resource, which is time, we're going to help you stay away from predatory lending and from over leveraging your personal credit. So we help you with getting you matched to the right funder, right? Matching founders to the right funders and to the right funding product because it's so important, you guys. It is so, so important. And luckily, we have a great team with amazing over 40 years of industry knowledge. And with the volume that we do, with the volume that our partners do, we're really able to get business owners approved for what they need. And that is exciting. So why Domino Effects Group, guys? Well, if you guys don't have any experience in financing, then you probably didn't even realize that all of these type of options exist, or even basically you might have heard of them, but you don't really know how it would apply to your specific situation. So finding the right financial solution can sometimes be time consuming. It takes time, right? Especially if you're doing things like grants. I mean, gosh, those things take time, don't they? So you want to, because you have to put thought into it, right? You want to make sure your message is conveyed. So ask yourself in these tough times, right? These three questions. Now, can you get capital? Can I get capital for my company? What type of loan is available for my business? And how much can I get? Those are the questions that you need to be asking, okay? So, like I said, with us, you're going to get the 40 years of merchant banking, with placing loans of all types in all different industries with all different types of lenders, right? So, we take that expertise, we put it together with this comprehensive and professional loan package that we do for you before we send it off to the lenders. But instead of you going online and risking your personal credit, risking all of these inquiries, not knowing who you're applying with, wasting time, wasting months, instead of you doing that, then we have a very targeted approach of connecting with our lenders. We know them, we know what they're looking for, what their qualifications are. And so it's a much, 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 much smoother process, guys. So thank you, because I want to talk about what are some of the qualifications, right? Well, there's not really, I mean, time of business is required, right? But there's no time in business when we're talking about certain products, right? So if you're talking about something like an MCA loan, revenue based financing, things like that, time in business maybe 3 months time in business, but those are the programs that don't require you to have excellent credit. So you could have, I think I've seen a 580 FICO score. And if anybody here doesn't have a 580 FICO score, or if you want to work on your credit score, I would be happy to refer you to some people who helped me with my credit, because child, I can tell you I needed help. So I would love to, if you need that information, I can send over that contact. You just send me a message and let me know. That's how we know what the people need when the people speak up. So one thing that I do want to say, of course, to term loans is, if you can get approved for term loans or equipment financing or whatever type of financing, accounts receivable, line of credit, whatever you're going to program or product that you're going to be going with, make sure that you have a plan. Okay. You need to have a plan in place. You need to know what you're going to be using the funds for, because then you know where you're headed, you know where you're going, because things are going to pick up in your business, things are going to happen, and you need to stay focused on what the end goal is. But if you have a plan too, when you're speaking with the banker or the lender or the credit issuer, when they ask you, and they will ask you, right, what are the funds for, we ask you what the funds are for. If you don't know, or if you articulate in a way that conveys like you don't know, right, then they're going to lose confidence in you, right? They're going to lose confidence in the ability to lend to you. So write down, sit down, take the time, write out a business plan, get with an advisor, connect with the Domino Effect. That's exactly what we do within our ecosystem. We connect you with the right resources that can help you. But, keep this in mind, okay? Keep all of these things in mind when you're preparing yourself to leverage for these opportunities. Now, for all of my startup companies out there, okay? Now, I know what it's like to look up for funds as a startup, right? And launch. Now, you have a lot of options, right? Crowdfunding, you could look for angel investment, you could look for venture capital, equity investment, loans. But remember, preparation, right? You don't want to just be going out there and applying, asking for equity investment when you don't have all the pieces in place that where you're able to answer the investors' questions, directly, just like that. But for my startup companies, there are so many other options for you. Okay. Lines of credit, term loans, equipment. You can also get access, if you have this over a 680, you can access unsecured working capital. You can establish your business credit. That offsets 50 to 80% of your business expenses. It's a killer. Okay. So it really is amazing. And I talked about today some ways that you guys can access funding for your business. There are multiple loan programs that we talked about, multiple programs if you are a startup and you don't even need equipment, if you need equipment and you don't need so much working capital. But again, some of the ones that we went over don't require a minimum a certain FICO score. Okay, so you can get funded through these programs within a day, sometimes a day. It depends on how quickly you get the information back. but even up to, up to a week, right? Now, if you're interested in applying for any of the programs that I mentioned to you, as I will leave links below in the description, and click on that link, guys. It takes a few minutes, okay? It takes a few minutes. Answer those questions. It helps us gather information about you. It helps us gather information about who's watching, some of the questions you have. Not only that, but we're going to help you assess where you are currently, what type of financing you can qualify for. And if you don't qualify for any right now, then that's all right. Okay. It's a stepping stone, right? It's a domino effect. You got to be the first domino that topples the chain. So we got some work to do, right? So thank you guys for tuning in. Thank you. Thank you. We're supposed to be on here this morning, but we had some family things we had to take care of. You know how that goes. So, but I promise you, Domino Effect will be here every Tuesday, every Thursday. This is where we talk about everything business capital, business financing. We talk about founders, matching founders to funders. Not only that, but we've got some pretty exciting events that are coming up, you guys. If you're in the Sacramento region, then you need to be connecting with some of these startup pitch competitions that are going on. There's some accelerators that are happening. 1 million cups, fourth wave, NorCal boot camp, all kinds of things. Minority Women Lead. So make sure you're following, guys, because we give you all of this information in the newsletter so you can stay involved and up to date, right? We appreciate you. I definitely appreciate you coming every week and blessing me with your presence, your questions, and your comments, okay? So every Tuesday and Thursday, I'll be here doing the live streams. And we just want to help you get on a path to success, okay? And help you go a little bit faster than some of those other companies. So, all right, guys, thanks for tuning in. I'm Dominique, and see you next